Hello, welcome to the channel. So today is Monday, May 30th, Memorial Day. Hey, so welcome to the channel. So today we're going to take a look at what is going on in terms of what economic data is coming out this week and see what's going on. So today's Memorial Day, so a special thanks to all those people that have served out there. So today, Monday, the markets are closed, but then Tuesday, we have some data coming up. We have Case-Shiller home prices, and then we have the Chicago Pmi and consumer confidence. I don't know. I don't know if any of those are going to be very important. You never can tell sometimes. And then we'll have mortgage applications coming up on Wednesday and ADP employment change. And then we have the JoLTs, the job openings and stuff. So it's going to be kind of interesting. Some of this stuff, kind of curious with the ADP, how that's going to relate to the big guy, which the big guy really is on Friday, the non-farm payrolls. Now, payrolls have been going up at a, relatively moderate pace, but, we have to start wondering if we're going to start seeing recession here. We're going to have to see if we're going to start turning that corner and the payrolls are going to start dropping off. So that would be the first thing is, we get ADP unemployment change on Wednesday. Look at that. It's there twice. So it seems like there's a mistake. So I think the ADP comes out on Thursday. So look, you got to go check that yourself. But that will give us an indication on the non-farm payrolls. And so the non-farm is probably going to be one of the biggest things out there this week. If everything's normal, then it should be fine. But if for whatever reason it comes in bad, then it could be an issue. So let's go check this out. Okay, so coming out this week, one of the things will be the Chicago Pmi. So this is one of those diffusion indices. And so what happens is basically a value below 50 is contraction. So we're still in expansion right here. You're looking at the big picture, you can see how we really, in the Cerveza shutdown, they had beaten the crap out of everything, really had contracted a lot. And then we came flying out. But right now we are on the decline. So, things are declining. So I imagine at some point it will drop below 50, but it has not gotten there yet. And looking at how much it moves any period of time, it'd probably be right at 50 maybe or something. Wouldn't expect it to go negative. So not unless there's something in there with the new orders or something that's like annoying, then that might shock the market. But probably, I'm guessing not. Then we look at our Case-Shiller for the national home price. This one's going to lag. So this one is still showing prices just going up on homes. So, I wouldn't expect anything there because it's going to, after the fact, you'll see it. Since basically the the shutdown there, mortgages applications have been going up, and the absolute value mortgage applications have been dropping really this whole time. And so this is not the percentage, this is the mortgage applications. So I'm looking at a chart of the number of mortgage applications for every reporting period, which is on a monthly basis here. But one thing to kind of note is that this right here, we're really close to the pre-Cerveza sickness level. We're all the way down there. So really the mortgages have come off, and that's a reflection of this increase in interest rates, even though that has been improving this week. Our non-farm payrolls, you can see here, one thing to note is payrolls were really increasing all of 2010 to 2020, just had this increase in payrolls, and then it just they shut everything down, so they deliberately destroyed everything in 2020, and we've come up really fast, but we're still not quite there. We're still not to pre-pandemic levels. So it's going to be interesting to see. My view is that, at some point, given what's happening in the stock market, given what's happening with interest rates, we know we already have layoffs in mortgages and refinance, the mortgage lenders and that kind of stuff. Those companies just like to make a living just doing refis, and with rates up, it's a very tough one. So but we don't see it yet. So as we wonder at some point, is this going to be the month where we're finally going to see, we're going to see the payrolls finally take a hit? We'll see. And the other area that we're getting this week is job openings. So this is the JoLTs. Now the JoLTs has got all this issue of there's a lot of possibly double counting, or people, if they're looking for someone, they're going to put multiple things in, and are they really going to hire those, whatever, who knows. But it's still showing ticking up. So we'll kind of have to see on that one. But this would be kind of an area to see if we get like a really bad JOLTS number and the employment is still looking as expected. Then maybe the job openings is the first place where you would kind of see that. So now looking at like the SPY, so we really had quite a move up. So this really looks to me, this is kind of typical bear market rallies. You had, really strong up days, boom, 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 really strong up days, 2.45% on Friday. The volume's low, below the average. And, looking here, see these big down days. You had some big, well, here you had kind of like a hammer, and you had up volume on that day. And then, higher volume here on this down day. So it's not really super positive. It just sort of looks, once again. So what would we have to have happen? We need some kind of basing to start forming in for it to start going out. And that's not what we have yet at this point. So yeah, all these indices kind of look similar this way. If we look at Dow Jones Industrial Average here, same kind of thing, decent like move. But look at you're in a tough position because you're coming up into the resistance. So, you have resistance here in this range. You have resistance, and so you're poking through the resistance. But this area of support is resistance. Up in this area, you have resistance here and stuff. So you're pushing up into that resistance, and resistance is not like a concrete wall. It's something that's very it's porous. It's something that does get broken through. I mean, support and resistance get broken daily, on a daily basis in the market, but they do have kind of an effect on things. So that's kind of what we see there. So what's really happening is we're pushing up into the resistance on these indices. So that's kind of like, you see there's kind of like a little bit of a setup. You kind of have a little bit of a setup here where it's like, oops, some of this, if whatever of the 10 things that we were looking at kind of comes out not as good as hoped or whatever, and remembering our bear market mantra that bad news is bad news, good news is bad news. So any one of those could just be a problem. We had that guy Waller out for the Fed, and he's talking about more, probably a little more aggressive on rate increases. And me, Kevin's trying to say how that's probably good. And it might be, because, it's interesting how perspective changed. So here, well, just really quick on Qs. So Qs, we're not really getting into that support. We're kind of getting there, but we're not there. So it's like really this week, if it's going to push higher, it's really going to start hitting really hard resistance at these levels. And this here is where I'd expect resistance. Now, in terms of the Fed raising rates, it's kind of interesting that this guy Waller came out and he's talking about maybe being a little more aggressive about raising rates. And me, Kevin, was talking about how, like, oh, this was a good thing because he's looking for the rug pull, and he's got a point. Kevin's a smart guy, and so that's why I listen to the guy. I don't listen to him to give him a hard time. I mean, I don't know any better than him. I do value his perspective, and so that's the thing. So the Walder guy, even though maybe more aggressive on more 50 basis point increases to getting up beyond whatever that neutral rate is, that's all great. And but the thing is, not talking about the rug pull, not talking about like, a Saturday Night Massacre or something where they go and they just raise by 100 basis points on a Saturday, and like everyone on Mondays, you got to deal with like just insolvency on Monday because of that kind of rapid move. So that kind of stuff is, not what we're hearing, right? So that's a positive in a way. Now our rates have come off a little bit. Now this will be an interesting one, right? Because so now once again you're going just speculating in very short term. Hey, if your rates had spiked up and they were at 3.1 and your mortgage rates had spiked up along with that, and they're pushing 5.3 or whatever on that mortgage, and maybe they backed off a little, and you can kind of look that up and see what the current mortgage rates are. But if they backed off a little bit, you could see that, there could be a window opening here. Like some people might feel, so some people that are trying to buy or trying to refinance for whatever reasons. Maybe you still have houses with possibly significant equity, so they may want to do cash out refis. That's one option. The other thing is people that are still trying to buy and they really want to buy that house, and now rates have come off a little bit. This may open up a window where we actually may see some surprising, and this is speculation, maybe we'll see some significant increases in mortgage applications. And maybe we see like a spike in some home sales and stuff as people try to get this in before rates go higher, if they're afraid. I don't know. It's one of those things you don't really know what exactly people are thinking, right? But you can kind of wonder about that. So let's see here. Let's look at our mortgages. Yeah, so looking at our 30-year fixed rate mortgages, you can see that they've turned down. So looking at that, you can see that they got up to a peak of about 5.3 and they're down at about 5.1. So, it very well could be that that's what's, there could be a little bit of activity there. And of course, this is going to be one of those, hedging your bets. If you're trying to refi or trying to buy, you got to hedging your bets. You got to try to figure out, okay, is it going to come down more? Do I want to lock in? What kind of flexibility do I have? Is this going to be like, hey, they're going to come off significantly and that's great and I got more time? Or is it going to be something where it's like, oh no, it's just a little dip and then it keeps going higher? I don't know. So that's kind of, I do not envy people that are, trying to buy a house right now and or trying to refi. I wish you a lot of luck with that because it's a painful position to be in right now. Looking at our Bitcoin is interesting because at least on this chart, you can see that it's kind of trying to hold. It's really trying to hold. Look, this is the support area in this 30,000. And you can see that we got this like little bit of an up bar here. They're really trying to hold this because as I'm saying, like if they don't hold this, then it's like there's no support in this whole area. So the next support is around, 10,000, somewhere around there. So this thing is going to fall apart if they're not able to hold it. So you Bitcoin people, I don't know. Good luck with that. I wanted to look at wheat. Wheat had broken out and then come off. So that's kind of good that wheat has come off a little bit, but we may not be out of the woods yet. I think one of the issues is these are going to be the contracts. So these are going to be how wheat is traded in the future. And that may not actually totally reflect what, countries and people are paying. So it's interesting. You had this kind of ascending triangle. It broke out over here, came up, and there's a really heavy duty resistance at 1275. That's really an amazing amount of resistance. So that's kind of interesting. I don't know where that's coming from. I wonder if there's some kind of technical or structural thing behind it that makes that. But what we still kind of have is this too aggressive uptrend behind it. So, I don't know if this is going to be one of those deals where, it keeps working its way up, this trend line. And sometimes that's how it works. Hard to say with that, but I really wish wheat would go down in price. Brent crude, let's look at Brent. We'll just look at Brent because it's a more international price. You can see that this thing had kind of compressed, symmetrical triangle, really failed hard here, came off, but then it found support and then it's kind of peaked out a little bit. And so this is just one of these, I don't know what the heck's going on with this thing, but sort of the issue is that it's still pressing its way up. It's pressing its way up. It's, pushing through the 115, the resistance, boom, boom, boom. It's kind of above that 115 resistance right now. We have next resistance in the 117.5 range. So this thing is slowly working its way up. The interesting thing about that is as well, though, is like, look, the EU sanctions against Russian oil don't appear to really be going through. There's finally getting pushed back by some of the other countries. Now, maybe they'll actually get some of that passed, but it's looking unlikely at this point. So that's kind of the setup with that. So oil might be going up a little bit, but it's going to be hard to say. Let's look at ARC, I just kind of look at this because this is really in the highly speculative area. Once again, still declining. Yeah. So looking at ARC a little more closely, updating this, you see it's down over 73%. And this is, from the peak using the body and the intraday range going down here, approximately 73%. So it's still declining. We do have this kind of sign that maybe there's some people taking profits and stuff because there's some, bigger moves in here. But my goodness, that thing has just gotten the crap kicked out of it. It's got to base sometime, not unless these companies just go bankrupt. I just don't know. Like, okay, so if I look at it and say, like, I had that video about Tesla, looking at Tesla, and I said, look, they're a car company. All car companies, like in recessions, come on, it's a shitty business when you're in a recession. It's a crappy business. So we know that they're going to have trouble. They will have a fall off in their sales. All car companies do. They're not going to be immune from it, especially because their cars are on the more expensive side. So, this is being reflected here. And fortunately, it is kind of holding up better than some of the other companies out there. One thing I want to do is I want to take the log scale off because it kind of makes it deceptive. But log is good for like engineering stuff, but stocks, not as much. Then yeah, so Tesla's kind of come off, but it's this thing is holding up. Well, see, here's the thing. When you look at this chart, you see that, oh, it's really holding up relative to the moving averages. Yes, it's below the moving average. Yes, it's definitely pulled back. But one thing to kind of note is that, hey, look, dude, this thing was at 1200 and it's at 600 now. So this thing really has come off 50%. So people that have just been holding it the whole time are off 50% from from the all-time high. And people that bought in this range up here kind of are underwater. So that's just something to keep in mind. All right. Well, I think that's it for this one. So we'll see what happens this week. Bye.